So Bitcoin hit 49k in a global market sell-off, and in this video I'm going to be going over why now might be the most profitable time to be buying rather than panic selling. So let's get into it. First of all then, apologies for the mess behind me. My office has been temporarily turned into a child's bedroom for the week, which is highly inconvenient considering what has happened over the past few days. Speaking of which, let's get into what has happened. So over almost $2 trillion has been wiped out from the US stock market so far today, as you can see on the screen in front of you. A pretty bloody day. Now, we do often have big pullbacks in crypto, as we well know. 30% pullbacks on Bitcoin in a bull market is not uncommon. However, this has obviously been caused by a wide variety of things. So it started with the Japanese stock market crashing overnight. As you can see, the Taiwan stock market suffered its worst losses since 1967. Japan's stock market suffers worst losses since 1987. There's been plenty of liquidations. You got one here, $1 billion liquidated from the cryptocurrency market in 24 hours. Robinhood halted 24-hour trading. So yeah, it's been a pretty monumental day. MicroStrategy and Coinbase down 24 and 18% pre-market respectively. Now, there has been a little bit of a bounce so far in the US market. Let's get into the charts. Let's get rid of that. Back to the chart. So Bitcoin did come back down. It hit 49k early hours of this morning and just before the US Open as well. Let's get down to the 1 hour and show you that. So as you can see, wick down at about 6 a.m. This morning, hit 49k, and then we hit 49k again just before the US market opened, and we've had a little bit of a bounce. We're coming down now. As you can see, big divergences forming on the lower time frames where we've rallied. We've made higher highs on the RSI, but lower highs in price, and that's something I was going to talk about towards the end of the video in terms of trading. Being careful about jumping in too soon and FOMOing in, thinking, oh, we've bottomed, it was 49k, now it's already at 53, and jumping in. As I say, going down those lower time frames, you do see those divergences forming. In fact, it's the same on Ethereum as well, and probably across a lot of altcoins as well. You can see, as I said earlier, higher highs on the RSI, but lower highs in price, causing a bit of a drop. But from the early hours this morning, we have rallied quite a bit. Now, let's get into some of the technicals. So talking BTC first. So on the higher time frames, we do have this support here at 52k, which so far is holding quite nicely. So a weekly close above that would be pretty positive. If we were to lose that, then the next big level for me is 45k. Not only is it a big level in terms of previous support and resistance, but if we go for a fib, take that from this leg from the 22nd of Jan and go up to the all-time high. As you can see, we're currently sat on the 618, which is the 52k level, and then you've got that 786 next fib level coming in at 46k. So as I say, that would be the next level for me to look at should we lose 52k as a support. In terms of more locally, if we go down to the daily, so we had this block of accumulation back here in February. As you can see, I talked about this area potentially being traded back when we first looked like we were going to lose that level of 60k all the way back in May. Of course, we didn't get down there. We didn't also get down there on the dump at the beginning of last month either, but we have now. You can see we wicked straight through it into that 49k area, and this area being between 52 and 50k. So I think if we get a daily close above this 52.7k level, that's actually a really nice level in terms of, you know, looking for longs, looking for bounces, and your invalidation being a daily close back below 52.7. That gives you a nice local invalidation area to work off of. And then, as I say, if we get below that, then we're probably heading down towards that 45, 46k area. So keeping an eye on that. If we take a look at the CME chart for Bitcoin, so we did have a CME gap, which we were looking to fill over down towards that 60k to 59k area. So that's what I thought was going to happen over the weekend, especially as we dropped on Friday. I thought, we're going to trade into Monday morning or Monday US Open in and around this 59k area, and then probably going to bounce. Of course, things took a massive turn last night due to the things I talked about at the beginning of the video, and now we have this massive CME gap above us as well, all the way up to sort of 62k. So a few gaps that are going to need filling at some point but of course we may well be seeing at lower prices before that happens. Another couple of indicators to look out for potential bottoming, or areas for really good opportunities to buy. We look at the VIX. So the VIX hit a level of 60 earlier this morning, and the only previous two times the VIX has been above 60 was the 2008 financial crash, as you can see, in October 2008, and also the COVID crash of 2020. So not saying that we've necessarily hit a bottom, but in terms of opportunities, buying opportunities, this is looks to be a very good one, a very rare opportunity. As I say, the only two times the VIX has been this high was those two previous crashes. Not only that, but if we take a look at the Fear and Greed Index, currently on 31, the last time we were down here, as you can see, was all the way back in September of 2023, which is of course when Bitcoin was at around 25k and then rallied all the way up to the new all-time high. So a pretty good indicator, the Fear and Greed Index. Again, not a guarantee that we have found a bottom, but we may well be very close to it. And as I say, these opportunities don't come around very often, so take that as you will. Another thing to consider as well with the problem we have with the crash that we've currently suffered is the potential for a Fed rate cut or emergency Fed rate cut. As you can see from this article from Yahoo Finance, traders now see a roughly 60% chance of an emergency quarter point cut within 1 week. So will we see that happen? And what could potentially happen from an emergency rate cut is a complacency bounce, maybe put in a lower high, and then return to the downside. So we might see a little bit of a relief bounce on that potential rate cut, and then drop further. But of course, that is all speculation. A, we don't know if we're going to get that rate cut, and B, we don't know 100% what the outcome of that will be. So you have to stay very nimble and approach with caution. I'd definitely stay off the leverage for the time being. Let's move on to another couple of interesting things in terms of ETH BTC. Or in fact, we've not talked about ETH yet. Let's talk about that. So let's go for the monthly time frame. Now this is a potential trade I'm looking at should it come low enough. So we broke out of this monthly range. So we had a monthly range high of $2,050, range low of 1179. We broke out of that back in December of last year and went on this nice rally. Now, of course, that means we have pretty much come all the way back, and we've round tripped the entire gains that Ethereum made in this year, which is not a great look. What I'm looking for is a retest of these monthly range highs as support around $2,030, $2,050, and then play that back up to the monthly level of 3,760. Now, this will be like a long-term positional play, very, very low leverage, probably even spot or 1x leverage, just so that I actually have a hard stop loss in. And yeah, I can actually manage that better than a spot position. So, but that's what I'm looking for should it come low enough. If we take a look at the weekly, it's a pretty decent level on the weekly as well. However, there is a chance that if we do rally, we may well hold this $2,500 weekly level as support. And if that is the case, then that, again, similar to that level I talked about on Bitcoin on the daily, has a nice little local invalidation area where you can use that as invalidation cut if we get a weekly close below. So keep an eye on that in terms of the weekly close for Ethereum. Talking of Ethereum, let's talk ETH BTC. So let's go on to the monthly time frame, and you can see I've talked about this level a number of times in the past. So I talked about the monthly range lows at 0.05. Thought this was quite bullish, this deviation back inside after the ETH ETF announcement. Unfortunately, it was short-lived and we've dropped. The level I've been talking about since then, or the level I've been talking about if we were to lose 0.05, was this 0.04 level, and you can see we hit that on the nose and bounced up. You can see it's a clear level of previous resistance in the past, so that's had a pretty nice bounce so far. As you can see, nice big wick on the higher time frames. And in terms of Bitcoin dominance, if we go to the monthly chart, again, take it with a pinch of salt. It's an index, not an actual price chart. But you can see we're heading into this area of big resistance at around 57%. You can see big level of previous support and resistance in the past. So if that were to be respected, we may finally see that capitulation, or we may have finally seen that capitulation on Ethereum, and maybe, I'm not saying it definitely for sure because it hasn't in the past, but we may well see Ethereum actually outpace Bitcoin on a potential recovery. So who knows? Two charts to keep an eye on. As I say, just going off what the chart's saying, Bitcoin dominance at resistance, ETH BTC bouncing nicely off support. We may well see Ethereum outpace Bitcoin. We'll just have to wait and see. Finally then, take a look at Total 2. One thing that doesn't look particularly good for alts. I talked about this level of 940 billion being an important level on the weekly time frame. As you can see, we did get this deviate. We had a close below it back in July, and then we deviate back inside, which I thought was very bullish, the Trump rally. Unfortunately, it was just to sucker us in, grab liquidity, and then we've dumped right back below it again, as you can see, and we're now trading about 800 billion. So that's not particularly good. We are at a pretty decent level of previous support here, the start of this rally back in January. However, as I say, not looking good that we're below 940 billion. So it's all a bit of mixed messages at the moment. Best thing to do is stay calm and not jump into anything too quickly, too rashly, certainly not with leverage. One thing that does help is community. So not only do we obviously have our trading community in the Traders Lounge and the Premium, but we also have a free Discord access as well. So if you feel like you want to jump in, chat about your experience, ask some questions, we do have a free Discord to jump in. Go to our website, learningcrypto.co.uk, and yeah, as long as you've got Discord, you can jump in, ask questions, and get to chat to like-minded individuals, especially in times like this where there's a lot of panic and confusion going around. So feel free to jump in there, and we look forward to seeing you in there. So drop in the comments below, what are you doing during this market drop? Do you think that the bottom has already gone in? Do you think we're going to get that rate cut? What do you think is going to be the reaction to it? And what are you buying the dip on this current market crash? Let us know in the comments below. Like, subscribe, and I'll see you in the next video.